The labor market is extremely tight, and inflation is much too high. Against this backdrop, today the Federal Open Market Committee raised its policy interest rate by 0.75 of a percentage point and anticipates that ongoing increases in that rate will be appropriate.
Hello, and welcome to Stock Market Fever. In this special report, we will analyze and evaluate 5 stocks that could outperform and actually do well even after Fed Chairman Jerome Powell's declaration of war on inflation. And you'll definitely want to stay tuned to the end as we provide our final wrap-up as to which stock is our number 1 selection to do best in spite of inflation and rising interest rates. And you may be in for quite a surprise, so stay tuned. We all know that pretty much every sector reacted viciously to the Federal Reserve Board raising interest rates by 0.75 of a point on Wednesday, June 15th. The market was awash in a sea of red as the Dow plunged over 740 points on June 16th to close under 30,000. There was a lot of panic selling, which seemed to cap off a miserable year in which many hitherto stalwart stocks had been absolutely smashed after releasing bad earnings or guidance. Witness Facebook, Netflix, Shopify, Teladoc, DocuSign, and so many more. And even if a company did issue good earnings and guidance, they sometimes would get bashed in the downdraft, seemingly without rhyme or reason. Witness Tesla. But with the growing fear that we will continue to have the worst of all worlds, vis-a-vis high inflation, high energy prices, high interest rates, leading to a recession, we must carefully look for opportunities where to park our investments for the coming storm. So here they are, the top 5 stocks that we feel will do great in the coming months. The number 5 stock on our list is Marathon Oil. Marathon is a leading energy exploration and production company with active interests in the U.S. and Equatorial Guinea. Marathon stock has skyrocketed this year, more than doubling from $16 per share up to $33, before pulling back in recent days down to $24, in tune with the rest of the overall market and a weakening of oil prices from about $118 to $110 a barrel this week. The price of oil dropped due to fears that a recession triggered by the Fed's fight against inflation might dampen the price of oil. But we believe that the demand for oil will continue to outpace the supply, and that the price of oil will start to reach new highs. And another big plus for Marathon Oil is their commitment to return to share owners 40% of cash from operations, and in their first quarter of 2022, they reported they had actually returned 60% in the form of dividends and stock repurchase, reducing outstanding shares by 11%. Price now back down to earth at 24, with a trailing price earnings of under 9 and a forward price earnings of under 5. We believe Marathon is a good stock to buy and hold to beat inflation and even a mild recession. The number 4 stock on our list is Merck. For more than 130 years, we have provided hope to humanity via the discovery of crucial medicines and vaccines, says Merck, a leading international medication developer, manufacturer, and distributor. We aspire to be the world's most research-intensive biopharmaceutical firm, and we're already on the cutting edge of healthcare innovation, advancing the prevention and treatment of diseases in humans and animals. Merck does not have the high-profile COVID vaccines or treatments that have brought fame and wealth to Pfizer and Moderna, but it does have a well-diversified portfolio of drugs focusing on cardiovascular, respiratory, and infectious diseases, cancer, nervous system disorders, immunology, and women's health. Despite not having the high-profile COVID vaccines or treatments that have brought fame to wealth to Pfizer and Moderna, Merck has been growing in sales and profits. Merck's sales increased from $39 to $48 billion between 2019 and 2021 and is expected to reach $57 billion in 2022. Merck is trading at an attractively valued 16 times earnings at the $87 price range and under a 12 forward price earnings with trailing earnings of $5.48 per share. Merck also stated on June 7th that their COVID oral therapy tablet, Dagevrio, showed a 33% lower requirement for acute care visits or COVID-19 related acute care visits in a third phase study trial. Though this statement does not guarantee that the medicine will be authorized, it does provide Merck with the potential for a large new stream of revenue. The number 3 stock on our list to buy after Jerome Powell's speech is Microsoft. Priced around $247 per share at the time of this report, Microsoft is trading about 25 times earnings, which is very reasonable for a tech stock that is in a good growth mode and should be somewhat resistant to an economic slowdown. In fact, we believe that if the Fed continues to raise interest rates and causes a mild recession, that Microsoft might benefit as consumers switch from Apple's higher-end products to Microsoft's offerings. We are very impressed with Microsoft's very successful transition to cloud services, which offer a recurring revenue stream and which also makes the company somewhat recession-resistant. Additionally impressive is Microsoft's strong net profit margin of 37%, and analysts expecting the company to grow by about 16% annually over the next 3 to 5 years. And that is why we include Microsoft on our list of stocks to buy after Jerome Powell's war on inflation speech. The number 2 stock on our list to buy after Jerome Powell's speech is BlackRock. With over $9 trillion in assets under management at the end of March 2022, BlackRock is the world's largest asset manager. BlackRock has a diverse product mix, with equities accounting for 53% of managed assets, fixed income accounts for 28%, multi-asset class accounts for 8%, money market funds account for 8%, and alternatives for 3%. The company's iShares ETF platform dominates the local and international markets, accounting for over 2/3 of long-term assets under management. Most impressive is the fact that their assets under management are weighted toward institutional clients, who in our view are less likely to panic sell and pull out cash as retail investors in the face of market downdrafts. BlackRock shares have fallen massively this year, dropping from 927 to about 582, but we believe these shares are oversold, and that with a 14 price-earnings ratio and with a 32% net profit margin and an expected 6% annual earnings growth expected over the next 3 to 5 years, that BlackRock offers good value. We are also comforted by BlackRock's conservative balance sheet, which shows a 20% long-term debt-to-equity ratio. And that is why we are including BlackRock on our list of stocks to own after Jerome Powell's war on inflation speech. And here it is, the moment you've been waiting for. Just what is the number 1 stock to buy after Fed Chairman Jerome Powell's speech declaring war on inflation? We'll be glad to tell you in a moment, but if you like this video and would like to see more like this, please click the like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. Thank you very much. Okay, back to our forecast. While we do not offer investment advice, we gladly offer our opinion. Okay, here it is, the moment you've been waiting for. The number 1 stock we recommend after Jerome Powell's speech is to take stock in yourself and start some kind of online business. What does this mean? This means that we believe that all capital investment in stocks involves taking financial risk, but when you start an online business, you can potentially have amazing returns in any kind of an economy by selling goods or services. The returns can be amazing, and we caution you not to spend money on inventory or expensive courses, but do get knowledge through watching YouTube videos, and perhaps look for very inexpensive courses on Udemy.com for step-by-step advice on how to start and grow your business. There are many great business opportunities out there and so many different approaches that will work if you take the time to learn the business first by watching others and then by doing, because experience is the best teacher, and continue this process. Businesses we really like are drop shipping on already established marketplaces like Facebook Marketplace, eBay, Amazon, and Etsy, affiliate marketing, drop servicing, freelancing, and so many more. So there you have it, our top 5 stocks to invest in after Jerome Powell's war speech against inflation. What do you think about this list? Are there any stocks you agree with? Are there any that you disagree with? Why? Please leave your thoughts and comments below, as we'd love to hear from you. And please be sure to like and subscribe to Stock Market Fever for future actionable stock market news, analysis, and alerts.